So today's session, I'm going to explain about one of the most common comment I've heard from people, who are being asked to invest in markets. The most common feedback is, "Hello, it's all fine. Hey, but I'm scared of losing all the money in stocks, especially during crash, and people, throw their towels and sell off all the stocks with losses and cut losses, running out of the market." So it's natural. We are all human beings, and fear is just part of any human behavior that cannot be avoided at any age or in any field. And it's even more exacerbated in the stock markets due to the nature of the beast. And even there are intense it becomes intense during the market crashes like the one we had in 2020. When you see your net worth obliterate by even 50, 60, 70%, it's worrisome for anybody to panic and sell out stocks. But how do you remain unperturbed during these kind of situations? All over the long course of period, how can somebody remain invested in stocks unperturbed and realize great returns? Because stock market return and success there, it's pretty much a game of temperament, nothing else. So how do one remain unperturbed? I have created a three pointed list which might help somebody to avoid panic and remain invested in stock through the thick and thins and and create great immense wealth. Let's get into that. So here are the three-pointer checklist. The first one is always invest money that you don't need for next 5 years. Ensure you don't need it you by any circumstance in the next 5 years. This will make you comfortable to stay through the course of entire bear market unperturbed. Now, never put the money that one needs near term, like for education or for house purchase or in stocks trying to trade for some quick returns. That is the surest way to poor house. And since you might have to end up selling stocks when it's down 60, 70%. Here is a hypothetical scenario. Somebody has invested, say, last year in an expectation that the bull market is going to continue and can get some quick returns, and has put, say, 100K in the market in expectation of generating at least 30, 40%, because 2018 returned such a way for including the index. So, but I imagine somebody investing 100K at the end of 2019, expecting similar returns in 2020, and come here 2020, the whole 100K is obliterated. I mean, it's wiped out to like just 40, 50K. And that kind of shock, someone is planning to use that money for education or house purchase in 21, it is not possible, and then they have to be in panic mode and sell that money and sell the stocks and cut losses. So it's notional losses until you cut the losses, as we all know. And so it's not advisable to put your money or capital that one might need in the next foreseeable future, at least for 5 years. So that will ensure that somebody can withstand this test of time and stay through the course. The second point is have a long term view and planning when it comes to investing in stocks. One of the most famous quotes from the father of value investing, as would call it, Benjamin Graham, is in the short run, the market is a voting machine, but in the long run, it's a weighing machine. And Warren Buffett has put it in another way on the time arbitrage in market, and it goes like time is the friend of wonderful company and the enemy of the mediocre. So, putting these two together, it's even more important that an investor look at very long term in terms of investing, because they reflect the underlying potential of the company that you're investing in the near term. It goes through the turbulent gyrations of the market up and down move, and it is really difficult to stay invested through the course. The third point is always understand that losses shown in your portfolio are paper losses, or so-called notional losses. They are not real until one cut the loss, that is, one sell the stock. Many people throw their towels when the market crash happens so as to take away at least whatever is left after cutting the losses. Now, but if you stay through the course of correction, stocks will revert back to the higher prices based on the real underlying value of the business or the asset. So this mean reversion concept, I've just not gone into that concept yet, but mean reversion is so true. Just like anything else in life, the prices are gonna revert to the mean, to the value that is underlying the asset. Now, once you understand these three concepts, you will not panic. And when the market crashes or when the stock prices correct drastically on some short-term news like quarterly earnings or temporary hiccups in the businesses, and businesses go through this up and down cycles. So all of us, we will remain not panic, and we will remain unperturbed during these market crashes. Hope this was helpful. Thanks for staying with me.